Selamat pagi. How are you, bro?
Good. How are you?
Oh, good to see you. And look, it's been is this the QCL newsroom?
I think so. I think we can name it as QCL News.
Well, good morning, audience.
we have to play
Faithful
part.
and loyal audience. Here we are for episode number 8, Bradley and Marcus. So look, what we've had in the last couple of weeks, we've had the government announce the new investor categories, the growth and the balance. And we've had an enormous amount of media interest in these topics. My colleague Bradley was interviewed on the 6 o'clock news, and I've sort of been in Bloomberg and the MBR and Business Desk commentating on these changes. Brad, what do you reckon?
Look, the policy was, the actual instructions was released last week, which is obviously this 47 pages of paperwork here. Yeah, sure.
Why is some of it yellow?
So basically the yellow part is the changes, so there's significant changes.
Okay.
And I think...
Oh, so the non-yellow was the existing policy.
Correct.
The new yellow is the new policy, the new law of New Zealand for investor immigration that comes out on the 1st of April, which happens to be April Fool's Day. So you've got to read the yellow changes into the existing policy. They're the changes that have been made.
Yes.
Right.
Don't mix it up.
Oh, sorry.
Don't mix it up.
Go ahead, please.
Initial review, obviously there's a number of things that I needed to clarify on, and I've already been in touch with the policy team. But so far, it is looking much better than what it was previously. In particular, the direct investment component. I think there's a lot more leeway now in terms of de-risking it. What I mean by that is under the old investor category, the $5 million direct investment, a large part of it was to attract or to get investors to invest in global businesses in New Zealand, which meant that a lot of the investment opportunities in the live deals are high risk startup companies. But they've removed that global businesses requirement. And so there's also a little bit of wiggle room in terms of property investment, but not in residential property. Basically, the criteria is that, look, it's not allowed to be a pure property play.
Before we discuss that particular aspect, let's just give this some context. So what we had was about 10 years where we had 1 to 3 billion coming into the New Zealand economy from business migration under the old Investor 1. Now, then we had 2 years where 5% of that amount came in. The numbers went way down. The policy changed. The direct investment, active investment didn't work out too well. And now we're going back to the future or back to the old days. So we got balanced. We have to bring $10 million into New Zealand, and growth where you have to bring $5 million. One of the other really big changes for our North Asian friends is that there is no longer an English language requirement, so you don't need to speak English to be able to apply under this category. So between Bradley and I, we've kind of seen it a bit differently. I've expected a tsunami of capital, and that's what I was referring to before, particularly out of North Asia, particularly out of China, which at one stage was 96% of the marketplace. And it's at a time when most of the Western jurisdictions are closed to China, and when a lot of the ultra high net worths and high net worths out of China have been penalized in some ways and asked to pay more tax by their local government. So some of them have some resentment and want to get out of the country. This law firm has specialized in the past, and we've controlled about 30% of that market. And we've been particularly effective where there have been transfer of money issues out of China. Bradley, what does the new policy say about that? Is it easier or harder for Chinese to send money to New Zealand?
Some of the loopholes that we were utilizing in the old policy, obviously, they've tried to close that down. So in my view, and first reading of this, it looks much tighter, meaning the money transfer issue is not going to be easy to overcome, especially if you're a Chinese applicant. And that's why I have reservation in terms of the inflow of applications coming through. I mean,
what about the QDII? Is that still there?
That's gone. That's gone. QDII, QDLP, that's gone.
One of our colleagues said it doesn't actually mention QDII, but we know the minister's been very vocal saying it's finished. Yeah. So how do we know that it's actually gone? It's just not fit within the ambit of these rules?
Well, the instructions itself, I don't think it would meet how the money is transferred through the QDII program.
Okay. So I remember last year you guys won an IPT case where it was found that Hong Kong is part of China. What I'm asking you, is it still going to be easy for the wealthier Chinese to get their money into New Zealand out of Hong Kong or whatever? Is it still going to be a simple exercise for them?
Well, I think that the issue with regards to that is once the funds are in Hong Kong, obviously there's no quota or limit to transfer funds out of Hong Kong. Where the underlying issue becomes very technical is how the funds came to Hong Kong. And that particular case that we won, it's saying that Hong Kong is part of China, so you shouldn't care how the money went from China to Hong Kong.
So will that case therefore defeat any of these stricter rules? Or
No, but that's what I mean by the loopholes are being closed, because there's a term there, original funds.
I see.
So original meaning originating.
I see.
So, and these are the things that I'm trying to clarify on. It's just because we want to know what the limitations are.
I mean, you've only had these rules for a few days, haven't you?
Well, about yeah.
Look, one of the cases that we're doing for an American and some Russian clients at the moment is where the client is electing to change from the active investor plus, which I assume closes on the 1st of April as well, and transition into the new balanced category.
Yes.
Is that, have you got a clear understanding? Does he have to do new medicals? Does he have to pay more application fees? Do they have to do new police clearance certificates? Or is it just adopting the stuff that INZ is already holding?
I would hoping that they would just adopt it just to incentivize the applicants to move to the new category. But again, I'm just getting in touch with our client's case officer to basically double check, hey, do we need new medicals, new police certificates?
Does INZ know what's going on? I mean, this transition thing where they're saying transition from that category, if you haven't been approved yet, into the new one, in that case it was an investor one, so it was 10 million. Balanced is still 10 million, so it's the same money, but how long is the investment term?
Obviously, the big difference is that under the old Investor Plus, it's only 3-year investment term, but under the balanced category, which is the new $10 million category, it's 5 years.
Did you explain that to the client?
Yeah,
Okay.
of course.
Okay, so they're mindful to transition over if they don't have to do new medicals and police certificates and stuff.
And obviously, the application fees are significantly more expensive.
Do we know how much the new one is yet?
I think it'll be similar, which is around 29,000, 29 or 30,000,
Yeah.
something like that.
This just what we've also experienced has been because of the media exposure, because of our client base and stuff. We've had a lot of the largest investment houses in New Zealand coming to seeing us. They've got an insatiable desire to get more capital into their businesses, to grow their businesses after a couple of very tough years, and see immigration as a potential driver for that. And so, honestly, we've probably had 10 of the largest investment companies in New Zealand coming and getting legal opinions from Bradley, and also applying to be managed funds under these classifications, which is probably enough of a topic to have a different video actually. But I just wanted to kind of test that a little bit, Bradley. We've talked about some of the facts that in terms of the encouragement for residential property development, the OIO rules still subsist, meaning that residential property is still classified as sensitive land. So just putting a property hat on for a minute and thinking as, say, a developer or a vendor, if one was doing a development block of residential property, like we know some of the New Zealand companies have been struggling to get their sales away recently, is there an angle to be exploited here for, say, taking some of the Chinese inbound capital, putting it into build-to-rent projects, which I note is exempt under the recent OIO classification? Or let's just forget about build-to-rent. Let's talk about a big residential subdivision on the North Shore. They're trying to build 500 houses. Sales have been crap. Can they package those up into, say, super lots and sell them off to new migrants fresh off the boat wanting to invest into property?
Yeah. Funny you asked that, because after our conversation yesterday with one of the big developers, I actually talked to a friend of mine that specializes in OIO.
Yeah.
And there seems, and I don't know whether I should be discussing this yet because it's early stages, but it seems like there is a pathway, because currently the policy requires that for the investment to be acceptable, the Overseas Investment Office must have given consent. And obviously the cost for consent through OIO is very expensive. It's at least 30,000, and then
Can I mention that it's over $80,000 for sensitive farmland? It's very expensive.
it's very
And
expensive.
actually, we've had some of our American clients say, no, thank you.
Yeah, so then the applicant is in a really difficult position. They don't want to spend legal fees, application fees for OIO, and then suddenly get declined later on, right? So how do you?
Well, can we just go a bit further? They could always just go into the stock market or into government bonds. Why would they want to take the development risk?
Well, obviously, some of them are either wanting to invest in something that they're familiar with better return, and obviously they might have someone that they trust here in New Zealand that
Yes.
they want to do business with. So in that situation, maybe the bond is not the appealing factor for them, and then it's actually the business that comes through from those developments that's more appealing to them.
Right.
So I would
So
imagine.
you mean like guys who are really passionate about property development or build to rent or infrastructure, some of those
Yeah.
topics, they will want to stick to that even if there's kind of easier options?
Well, yeah,
possibly.
yeah. Well, I'm just basing this based on previous experience under the $10 million category, where we had a lot of clients that invested in residential property because that was the project that they came to New Zealand, right?
Right.
So one of their big clients, they already put in $100 million in a big site in North Shore, and they wanted to utilize that.
Okay, I'm just going to clarify. So the expansion of investment class under this new balanced category means that you can invest in residential property development providing you satisfy the OIO rules.
Provided you got consent approved.
Providing you're compliant with those rules. But it still prohibits any of those properties being used for your personal use.
100%.
Okay.
That's always been the case,
Okay.
no matter what policy.
Just clarify.
Yeah.
Yep.
Yeah. And so there's, well, from my discussion, there's been a lot of speed and decision making with OIO. So it might not be 3 months, it might be quicker. And also there's an angle that I'll probably discuss with you afterwards,
Okay.
because I think it's a bit too early and I don't want to say anything
So
that's
the point
inconsistent.
is you're brainstorming this now to find solutions, right? Okay, what about, say, we know some of the funds have been in to talk to us, the commercial and industrial funds. Does this augur well for them? Is there an option for them to attract more foreign money into their funds?
My particular view is that it would qualify.
Yeah.
So if you were a property syndicator,
Yeah.
it would qualify. I'm just clarifying right now with Immigration New Zealand in terms of the structure, because it's not very specific. What it says is property development here, 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 but it doesn't say, well, what type of structure is it that's acceptable? Can you put it in a debt structure, put it in equity structure?
Yeah.
What if it's a trust structure?
Okay. And I note the Appendix 11 contains all the definitions,
15,
right?
yep, 15.
Appendix 15, sorry. So the thing is, for the managed funds, are they able to undertake the business of residential property development
Yeah, so there's
and comply with these rules?
Yeah, so there's two types of managed funds.
Yeah.
The one managed fund is for direct investment, well, for the growth investment, the $5 million category, right?
Yeah.
For that to qualify, it has to be approved by NZTE, and that managed fund needs to invest in businesses which is compliant with the rules, right? So
tricky for property or not?
Trickier,
Okay, trickier.
because as I mentioned
So
before,
therefore, let's give that context to the audience again. In the old days, we had 100 families bringing in $10 million a year. That's $1 billion, right?
Yep.
Hopefully there'll be more. We'll see. Time will tell that. And then we had how many families investing in well, it was 3 million before, but that was how many?
Yeah, so under the old Investor 2 category, which was 3 million, we had 400 families a year capped,
Okay.
which is
Capped.
capped.
And now
There's no cap.
there's no cap. But there's no real property specific clear angle under the 5 million category.
Especially for residential.
Which is where most of your applicants are.
Correct.
So you're working through also to see if there's an angle there.
Yeah.
And then if not, then you've got your $10 million guys who are balanced. I assume that the same rules will apply where they can put 5 million into commercial property, 2 million into industrial property if they wanted to,
Yep.
and 3 million into government bonds, for example.
Sure, yeah. You can
Do
have
we know
a...
if that's permissible?
Yes, there's permissible.
Okay. So you've got options.
Yeah. So the
Oh, can I just ask, if you're one of these trust funds, big or small, and you want to get accepted, what you're saying is under that $10 million category, it's INZ that governs all of that.
Yep.
how much does it cost to apply to be a recognised trust fund provider or compliant with these rules? What's our legal fee, roughly speaking?
Well, it depends. So the NZT application is for 5 million, and that's where you get it. You become an approved direct investment or a managed fund.
Yes.
But under the $10 million category, there's no particular immigration will not give you a accreditation and say, hey, you're an approved fund, right? But we can provide a legal opinion based on our background and say, hey, these are our understanding. These are the structures that we've had in the past, and this will be compliant, right?
Okay.
And obviously, we will work with Immigration New Zealand informing that legal opinion.
It's interesting just watching our property clients. Like, we know that one of New Zealand's biggest apartment developers that has been quite inactive for the last 2 or 3 years is now taking a much more, has a lot more interest in our market. They've always been particularly skilled at picking the very bottom of the market and buying the development sites there and then selling in a rising market. Do you think that this capital flowing into New Zealand will have a positive impact on our economy?
Well, I think we desperately need it. From what we've experienced right now, you can see the insatiable need or thirst from all these investment banks and commercial property syndicators that we really need capital in New Zealand. So I think the natural progression is that if we do end up receiving that $1 billion a year, of course it's going to be better than when we didn't receive it. So
you know, in the good old days when we did things like we travelled to Japan with ANZ and BNZ and targeted a lot of their high net worth families who had that death duty over 60%. You remember in those days we could sometimes get these guys approved their residence visa within a week. In fact, I think we got one approved within 3 days. I mean, it sounds amazing, but you've got Forbes Asia, you've got medical certificates, x-rays, police clearance certificates, source of funds. They've got everything, a public listed company and Forbes Asia saying, you know, this guy's whatever. They approved him in 3 working days. Is priority processing going to attach to these applications again, or are we going to deal with clunky bureaucracy that takes forever? What's your prediction?
I might anticipate that they are going to give priority processing. When I mean priority processing, it'll be within 3 months or 2 months. I mean,
you can't complain about that.
You can't really complain. That's pretty much the fastest in the world.
Within a week.
I mean, that's kind of an exceptional case, just because.
But you're from a low risk jurisdiction like Japan. You're high quality public figure, well known. Everything's kosher. Why can't you approve it? Yeah,
correct. I mean, I genuinely believe that they will try and approve it as fast as they can.
Have you found that the business migration specialists down in Porirua have become a bit slower after COVID, that they've kind of gotten the slower work practices than what they used to be like before? Or?
Yep. Well, I think what happened is during COVID, they put a hold on the application, and the $3 million category was oversubscribed. The parent retirement category there was a lot, and just they didn't have the resources coming through, and they were clearing all that out. And then the new active investor category came in, but because it was still had residual applications that are being processed, and then at the same time, they've kind of tried to apply the new policy retrospectively with the existing application, and that's why we're having a scrap about it, right? We had a money transfer issue. We had 13 applications approved in the same set of circumstances, and the last 2 they didn't approve.
That's hard to cover.
You know, so that's our personal experience, and I think because of that change of approach, the residual applications that are being processed, it's taking longer to process, and hopefully they're clear that backlog now. And
just going back to my apartment topic, you know, vertical construction as opposed to subdivisions out in the suburbs. Like, you know, if Auckland was trying to encourage a lot more apartment developments, we look at, we go right back to Metropolis. In those days, you could buy serviced apartments as with a guaranteed return for a couple of years with a big hotel operator out of Singapore called Liang Court, or you could buy as an owner-operator, and one included GST and one was zero rate for GST purposes. They're in a zone where it's mixed use, both commercial and residential. You may not know the answer to this question, but my question is, would a new apartment tower coming out of the ground in the CBD satisfy these immigration rules under the balanced category, Can you give a clear answer, or you're not sure?
Well, the balance category, it says residential property development and it says new.
Yeah.
And so whether it's, a different type of property class, whether it's high rise or whether it's just
This is okay. We know commercial property is acceptable.
Yep.
We know industrial property is acceptable. We know residential property development is acceptable, provided you're compliant with OII and stuff.
Yeah.
So my question is, if you're doing apartments which have both, say, a hotel and residential apartments,
it's a mix.
but you're not using them for your own personal use. You're the investor mobilizing the senior debt, the construction funding.
Yeah.
Is it going to satisfy these rules or not, or do we need to examine it more carefully?
I think we need to examine it more carefully because there's going to be a portion of that development which is going to be definitely acceptable because of hotel, commercial. Then residential should also qualify, but depending on ultimately, is it creating new supply of housing?
Right.
That's the key thing,
So
right? Because it says
you're going to negotiate that with immigration officials in Wellington.
well, yeah, because the intent of the
who don't really have a property background, right?
yeah,
I'm just saying.
but I'm saying the intent behind the policy for residential development is to create supply.
Yep.
Right. So
Well,
are we in line with
It's
that?
a tick, doesn't it?
Yeah. So are we in line with that? And if we are, then it should be compliant.
I do worry a bit that these guys sometimes, career bureaucrats, they don't really understand what it's like to negotiate terms, to buy a property, to get your consents, to deal with the local authority, to deal with all the stakeholders, to deal with your mortgagee, deal with your lawyers, blah, 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 and fit within their box. To me, sometimes I do get, I guess that's where we can add considerable value because we can
Package things up.
line that out, package it up, get the approval in writing. The developers can walk around and go to China and say, here you go, guys.
Yep.
We've got the magic piece of paper.
Yep.
Right?
We've got a legal opinion confirming that.
Yeah.
Or coming up with a structure that is going to be compliant. Because I don't think there's many.
You're not going to say, rely on this at your peril.
Yeah.
You're going to say,
Seek legal independent advice.
Yeah, no, very good. We'll be covering out. Yep. So look, that's interesting. So I mean, you're kind of still. Are you still predicting a trickle?
No. So let me probably rephrase
Okay.
my
I want to say
prediction.
I'm predicting a tsunami of capital into New Zealand. Bradley is not as bullish as I am. He's much more conservative. That's always been the case, right? And so you've got issues about fund transfers, immigration, whether they can decline you on that topic. That's where lawyers can add value, no doubt. And I know we're particularly skilled in that area. I've seen it many, many times. But are you thinking New Zealand's not the place to invest? Our dollar's cheap, mate.
No, that's what I mean. I'm extremely positive about where we're at and the feedback that we're getting so far. Because if you look at the whole political climate, right? So you got US and with Trump and the issues surrounding that. And then you also have Europe with the whole war in Russia. Actually, you had a German client yesterday. Was it yesterday or a couple of days ago? Came in. And the reason why he wants to move to New Zealand is because of the fact that should there be war, he doesn't want his children to be conscripted because they have to be, right? Like Singapore. And that's one of the drivers for them. And it's not just one, there's a whole raft of them or a group of them that is actually fearful of this, which is a real fear, right? And then also there's a growth area in Southeast Asia.
Oh, yes.
And not just China. So I'm not just relying on China as the main factor, just because the interest from China is always going to be massive because we are 5 million, they're a billion,
Well, I mean, under the old category we had, China was the engine room, but Japan was a good market, Germany was a good market, and Indonesia was a good market for us. And I know recently you've been doing these webinars with the ANZ and Findex and Bailey's for the entrepreneur category. Are you still a strong promoter of
Yeah, for sure. And it's because there's a gap in the market that's not being filled, right? Because the $3 million category before, where we had 400 families coming through, that market is always there, right? But the current product doesn't meet the $3 million guys because the product is still relatively risky, right? The $5 million. And that's why I'm trying to come up with clarifications on in which type of investment would property be allowed under the $5 million category, right? Residential is definitely exempt, like not qualify. But maybe in certain circumstances, as I mentioned before, if it's not a pure property play, if the property is linked to the business operation, right, and it qualifies within the economic agenda of the government, which includes infrastructure, and infrastructure includes tourism, education, and healthcare.
Yes.
So then there might be an angle there to say, hey, can we invest in, say, a childcare center? Or can we invest in tourism by way of a hotel? Or is it possible to invest in, let's say, what else is the infrastructure type of?
You're not talking about an entrepreneur now?
No, I'm just saying.
Back to
I'm just saying, until that void is filled, the entrepreneur work visa is going to be a far superior product because the investment amount is not $5 million, right? In fact, the minimum investment is $100,000, but obviously, realistically, you're not going to find a $100,000 business, right? So we tend to go and attract investor migrants or entrepreneur migrants that are investing at least $500,000 and creating 3 jobs, right?
Okay.
And from that event, we had around 18 or 20 attendees, and of those 18, 20 attendees, 4 or 5 has already expressed interest, and 2 or 3 has already locked in.
So,
And their investment capacity ranges from $500,000 to $2 million or $3 million. And so I think that is a very attractive proposition in that demographic, Southeast Asia, because they can afford it. It's not too much, it's not too big.
So what you're saying is, if you can't do the 10 million, you can't do the 5 million. There is always the entrepreneur category for those who are willing to actually live here, run a business, employ 3 Kiwis, maybe invest between 100 and 500,000, depending on which way they go, or more. And you've wrapped it around with other stakeholders, other people who can provide value. New Zealand's largest business brokerage company, or real estate company, Bailey's, with their business arm, and then you've got chartered accountants
Findex,
who are smart in terms of establishing businesses, and banks who will support those people. So you've got a wraparound service.
Well, every time you come into New Zealand to do business, you need a team, right? And this is, again, this particular category, you need to be specialized in this. It can't just be your normal licensed immigration advisor. It can't just be your normal immigration lawyer, because when you're looking at a prospective businesses, you need to know, is this going to be a good business? Is it legitimate? So where we add value is, we're not just making sure that the business is compliant, we're also got the commercial team to do the due diligence to ensure everything is done properly, right? And then at the outset, you already know you've got a team with you, you've got the bank to fund so you can have a capital structure, you've got your accountant to structure and establish the business, right? And then you've got Bailey's as the broker in finding the right business for you, right? And so we're really the only one that can do that at the moment. And there is no other.
So you should be promoting that more.
100%. Well, with all.
And I see what you mean. You can't shop around with that. You go to the lawyers who are specialised in immigration and commercial and business law.
Yep, right? Correct. And then we're
one-stop shop.
And funnily enough, I was probably one of the very few that's still familiar with that policy, because when that policy at its peak had a 96% decline rate, we were the only ones that were kind of still working within that framework. So the
government should be paying you for promoting their products.
I wish.
Come on.
Maybe just reduce the taxes.
Promote it themselves. Well, look, that's how we've covered the new balanced investor category 10 million, the growth category 5 million. There's more details. Anyone can reach out to Bradley, and he will give them everything they need. And then, if you can't go under those paths, there's an entrepreneur category. We're open for business. As our Prime Minister, hanging in there by the skin of his teeth, Luxon says, we're all focused on getting to yes, not finding reasons to get to no, and our whole legal system sort of being morphed into that in terms of the resource management laws, the immigration laws, the investment laws, and other stuff. So
Tax.
Great time to come and see us.